What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Welcome back to another live stream. Happy to have you here. And we had some housing data that just dropped a moment ago that looks a little rough. Housing starts came in at 1.18 million. That is lighter than forecasts by a pretty substantial margin. And it looks like they revised the previous number down from 1.47 million to 1.39 million. So some slow housing data here to kick off the day. Gold is up on the day about 0.8%. Really has not moved much from where I initially took the short position that I talked about yesterday. And we've got Nasdaq flat here today. Let's take a look at the daily chart really quick. We'll go full screen. And let's see where we got. So S&P 500 was very close to all-time highs. You're talking about not even 1% off of its all-time highs. Nasdaq also not very far off either, about the same distance. And the Dow Jones yesterday actually had a all-time closing high just after the pretty brief pullback that we saw the last few weeks, down 4% or so on the Dow. Nasdaq saw a little bit more than that, down 8.3. But again, rebounding very sharply here. And indices continue their bull run, it seems, for now. I am actually interested in potentially looking at some pullbacks on the indices. I'm looking at the Nasdaq specifically for some possible longs. I don't, there's not like a pullback that's taking place right now. If we take a look, obviously, daily chart, just straight up and to the right here. But I am watching this with a bullish perspective now on indices. If we do decide to pull back a little bit, I'll take a look at the Nasdaq here, which is currently getting a +6 reading, which is a strong bullish overall score. What we can see here is that where we're getting that score is from a combination of technicals being positive with the 4-hour and daily chart upward trend. Seasonal trends also look good this time of year. We also have sentiment and commitment of traders data showing institutional money buying the Nasdaq. And fundamentals leaning just slightly more positive than negative, specifically looking at stronger economic growth than expected and jobs market data that has been coming in better than anticipated as well. What's not been so good has been higher than anticipated inflation, but there's a bit of a not huge worry here because now there's kind of the expectation that the Strait of Hormuz stuff being opened is likely to be a positive for the markets going forward. And I think it's worth mentioning too, there is this, well, what about Israel? What about, them pulling away from the deal, not wanting to be a part of the US, Iran stuff? Well, to be honest, I think that from a market's perspective, there's only one thing that really matters, which is the Strait of Hormuz closure, right? So if you have the strait open, that is likely to be the most important thing, because as long as oil is flowing, as long as the price of oil continues to to stay under control or even trend lower like this, you have a scenario where, okay, people aren't too worried because that's going to be less inflation problems, right? That's what the market was really worried about. So I think when you look at stocks, right, they're sitting at all-time highs. The risk that initially took place with this is like, oh, this is going to be massively inflationary, and then we just kept hearing ceasefire, 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 and then now we've actually got what looks like, again, there's no final, we haven't finalized it, but it looks like there's going to be a deal. And so if there is a deal, then what that leads us to is, all right, oil doesn't need to be trading at $120 a barrel, but it also, to be fair, may not likely go back below pre-war levels either. That being said, we are at the lowest point that we have been since throughout this whole process, since before the war started almost, right? So we are seeing a rollover big time in the commodities world in oil, which is, again, this is very welcomed by markets. That's a positive sign. It's a good thing for risk assets because, again, lower oil, less inflation. So that brings me to the gold idea, right? So I am short gold. I still have the position on. It's a bit of a prove it story for me with inflation, because the other thing that we don't know is that it's easy to look at oil going down saying, okay, we're all good. Inflation's going to fall. Well, it might, but what if all of these supply constraints that we have dealt with for the last 3 months send inflation higher for a while before it gets better, right? What if we have sticky inflation for a couple months, more so than expected? It's possible, right? And so if you do get that inflation staying elevated for a while, I think that it's going to keep interest rates from getting cut too easily. And if that is the case, then gold still can remain bearish in the interim. The other thing is we saw institutions selling gold in the latest Commitment of Traders report. We have a downward trend overall. PMIs, economic growth metrics have been strong out of the United States versus expectations. This is a bullish thing for the dollar, which in turn becomes a bearish thing for gold. Consumer confidence was better than expected. Housing data today, I think, is helping to pop gold a little to the upside, housing data being soft. Producer price index numbers came in higher than expected. Yields have been generally trending up, though I am keeping an eye on them, and I'm open-minded to this. If inflation starts meaningfully coming in lower and yields start dramatically, crashing lower, like if yields on the daily chart start doing one of these guys, then that's gonna really challenge my thought to be short gold and silver, right? I've done really well overall on the gold and silver shorts that I've been in the last few weeks, the last few weeks. But I'm not married to that idea, right? So like I have an open mind with my gold short idea. If this thing blows out to the upside, inflation cools, if oil goes down to, $65 a barrel, I'm not going to stay married to this idea, right? I'm not going to double, triple down. I'm just going to take the trade. I like the idea of a possible gap fill on gold. And then I also think that, inflation could stay more sticky than people are thinking. And if that is the case, then I'm going to look to try and manage this trade, manage my risk, and adapt accordingly. I've been posting a lot of my trades publicly, which gets a lot of attention, both good and bad. It gets a lot of interest, but it also, it sometimes is very revealing from my perspective of like what traders think, like new traders think experienced traders like think and do. Like the expectation is like, oh, you posting a trade, you better be right. Like you know a lot, right? Like what the price is going to do. I say this so often, but trading is it's educated guesswork with risk management. That's it. because nobody knows with certainty what gold is going to do, because nobody knows with certainty what's going to get said by Trump next, or what's going to happen with the price of oil with certainty, right? Nobody knows that stuff. So if you don't know, then the logical thing to do is to risk small, make educated guesses, but be open-minded to changes. That's all you can do as a good trader. Like, you can't know what is going to happen. Like, I generally think gold can move lower, but if gold defies that thought process and rips higher, then I have to close the position. And logically, if I don't know that which trades are going to be winners and which are going to be losers, I just have to step up, take my trades, keep doing it over and over and over. If that is my thought process, then every trade should be sized in a way that it won't kill me if I'm wrong, or if I'm wrong several times in a row, which also happens frequently, right? If you win 60% of your trades on a 1-to-1 risk reward ratio, you are going to have losing streaks of 5, 6, 7, 8, 9, 10 trades in a row that are losers. It's just math. It's going to happen. Is it likely to happen all the time? No, but it's going to happen. You know, again, if you punch any calculator online, what's the probability of having, 5 losses in a row if you have a 60% win rate? It will tell you that if you do 1,000 trades, it's almost a certainty that you're going to have 5 losers in a row. But, traders who are newer to this stuff, that doesn't resonate. In the mind of a new trader, on a 1-to-1 risk reward ratio, if you're a good trader, you should win like 90%, right? But that's where there's this misconception of what profitable trading is. And that gets people into a lot of trouble, because they start to, based on their belief of that, their ignorance to what real trading looks like, they size their trades inappropriately. They get frustrated, or they're like, oh my gosh, I took 3 losing trades in a row. This strategy clearly doesn't work. When that just does not actually make any sense from a logical perspective. Even an incredible strategy, let's say a 65% win rate on a 1-to-1, which is like unheard of. Like, nobody has that. If you had that, you're still going to have 3 losses in a row sometimes. So it's just, it's understanding the mechanics of what profitable trading actually are versus what people who are still learning think they are. Here's a look at the dollar this morning. Dollar index, daily chart still looks intact to me. You still have a nice overall upward trend. We saw on the Monday open a gap down in the dollar index. Buyers stepping in. I would like to see some follow through here to the upside on the dollar. I am still bullish on the dollar. If I take a look here at my British pound short idea, I'm still looking at, I'm still in this trade. It's really been a patience tester. This one has gone back and forth on me. I did close out a piece of the trade, which was nice. Took half of the trade off. The other half is slightly in profit. And I am looking for this second half to make a larger push down. If it does not, I will stop out above the 61.8. By the way, guys, if you're enjoying the stream, do me a big favor, hit that thumbs up button, subscribe, all the good things on YouTube here. Greatly appreciate it. Yeah, look at oil, guys, down 5% today. You've got oil really, really coming apart, which is, like I said, it's a very positive thing for markets, for S&P, for NAS to see oil prices lower, because that means less inflation, or going forward, that means less inflation. Yields are also an area that I'm keeping a close eye on, because if you have, yields meaningfully breaking lower from here, then my gold short idea probably no longer makes sense, because that would kind of be a signal that either, it would most likely be an inflation scenario, right? So like inflation cooling, yields probably come down. SpaceX, dang, what's SpaceX doing? Let's just look. Oh, there it is. Just up a casual another 4.5%. Yeah, wow. SpaceX has been an unbelievable IPO, like really impressive price action here. Like a lot of times and it's not over, right? But like in IPO land, a lot of times when stocks first come public, they like pop and then they drop violently. But I think there was such a coordinated all-in effort because of the size of this IPO and because of how much the rest of the market weighs in on it. I think it was marketed very well. I think a lot of people have like lockup periods on shares that they own. And I think that there's just a feverish demand for space related stuff right now. But very, very impressive stuff. And I think that it's part of the reason why the market is kind of continuing, right? It's like, okay, you have SpaceX. Now you have all these other ones that are coming down the pipeline, Anthropic, OpenAI. And this sets a good tone, at least so far, for how other IPOs potentially might go. You have this massive coordinated, rush to get involved. And if you're OpenAI, if you're Anthropic, probably you're like immediately wanting to go public ASAP, right? Because look at how successful SpaceX was with their IPO. This thing came public. Oh my gosh, massive surge in investment. I mean, this is hundreds of billions of dollars flooding into your company. And those types of companies, these companies that, they lose money, but they have the promise of AI game-changing stuff in the future. This is very attractive to them to go public. I got SpaceX at $170, going to hold until my grandson. Wow, you are a believer. I personally think SpaceX is an awesome venture. My cousin works at SpaceX. She says it's a very, very cool place to work. I can imagine. And I'm a believer too. I think I'll say it differently. I'm a believer in the company, love the tech, but I think it's expensive, like ridiculously expensive. Do I want to short the stock? Not at all. Like it could run to 250, it could run to 300. I have no idea where it wants to go to. But for me personally, I only like to buy stocks when I feel like people are scared of the stock. People don't like the investment. They think it's a bad investment. That's typically when I like to buy stocks. And it's simply because you are talking about valuations here where like if anything goes wrong for the company, you could have 75% drawdowns. And you might say, well, I'll still stick with it because I love it. Well, that's if you are that type of investor, then do you. That's awesome. For me personally, I would rather wait and see if it goes down 50%, 40%, 30%, etc. And then the risk reward looks really attractive for me personally. Again, not financial advice. You do what you want to do. I'm old and young enough to have not seen the great financial crisis, but have seen space stocks in 2021. And if you have been around for a while, if you remember 2021, it was an eye-opening experience for many. This is 2020 into 2021 when space stocks went absolutely bananas, right? They went crazy. And you can see what happened in following years, right? So space stocks are very, very exciting. They are the promise of the ultimate frontier, but they are ginormous money losers. And the difference with SpaceX, though, I will say this, difference with SpaceX is they have so much of a monopoly head start on taking market share that I would love to buy that kind of company if it were to have a down 60, 80% type of move. I'm not saying I think it will. I'm just pointing out that I think for me personally, the risk reward on buying a SpaceX is much more attractive after, some kind of major sell-off, some concerns about the company, etc. As counterintuitive as it might sound, it sounds like when you first get into trading in stocks, etc., you're looking at this and you're saying, I want to buy stocks when they sound incredible. Like that's the intuitive thing. It's like there's nothing that's going to stop SpaceX. It's invincible. It's amazing. That's when people tend to buy stocks. And I've learned through doing that enough times, getting burned by that, that the lower risk, better reward scenario is actually waiting for stocks to go down and people to not believe in them and to buy great companies when they are on sale rather than when they are at the ultimate premium prices. Again, being at premium prices does not mean they cannot become more premium. Like you could see this thing go to 250. But that's my personal opinion on it. And if we just take a quick look at another one, how much do you believe Micron will reach? Yeah, so same thing with Micron. Like I am not going to be someone who's going to say like, yeah, it's a great buy right here. Like it's going to go to 1500. It's just not my style. Because again, I've seen the other side of major moves like this, and they can be very, very devastating. A couple months ago, we were watching gold hit $5,500 an ounce. And there were so many people who were becoming long-term investors in gold right here because they're like, I'm just going to buy it and hold it for a long time. Well, let me show you again. This is something we talk about frequently on the channel because there is danger to just that thought process. Like if you go back, let's say that, when it was screaming higher in 2020, yeah, you did fine if you kept holding it over a longer stretch of time. But let me show you some nightmare scenarios where people, if you had invested a significant amount of your personal capital in gold back in 1980, 1979, whatever, there was a 30-year period that went by before you got back to break even. This is not something unique to gold. This happens to stocks. Let me give you what's a good example. In 2001, there was what's the major shoot? I'm thinking of it. I'm blanking on the stock name. Giant tech stock 2001. Shoot, what is that? I can't think of the name. Anyways, many stocks in 2001 did this too. 2001, you had these unbelievable, God tier moves in markets. And a lot of those companies took 20 years to recover afterwards when the crash took place. So I'm just cautious when it comes to investing in very, very rich valuation companies. And I personally think, this is just my take on it, I think the better buy is like slow and steady type of value companies at this moment rather than chasing high PE tech stocks. Yahoo, obviously there's like the big internet names. I'm thinking about like the one that makes like server racks, and they're like a hardware company. They were huge in the .com bubble. It was like the Nvidia of that time, but I can't think of the name of the stock for some reason. Anyways, it's not that important. It's just that, like, for me, it's sort of like when it comes to investing in stocks, I just I've not, in all of my years investing in stocks, the bulk majority of gains that I've made from stocks have never come from chasing them when they are very hot. They have almost always come from, like, the vast majority of the gains that I've made in stocks have come from, I really like a company, and it goes on mega sale all of a sudden when everything's dropping over and over and over. Cisco, you guys got it. Okay, thank you. Why could I not think? That was driving me crazy. Yeah, let's look at Cisco, right? Again, I'm not trying to be a doomsdayer. I'm just trying to make people aware that, like, when a stock looks like this, I mean, look, this is what happened in 2001. And people say, well, it's different this time, but they say it every single time that it's different this time. So if you had bought Cisco when people, at this time definitely were saying to themselves, this is an investment, it's not a trade, I'm holding on to this forever. And if you had done that, it would have been 22 years to get back to break even. To break even, inflation adjusted, you're like way down here, right? Like, the point is, when you buy stuff that's red hot, if there is some sort of problem, you can suddenly watch, 3/4 of the value of your investment go to zero. And so I just think, you you have to be very careful when you have these types of moves happening in markets. I think that there are incredible technologies and companies being, going crazy right now. I just also think that it is a prudent thing to do to take calculated risk reward type bets. I'm trading the markets right now very actively from an investing standpoint, though. I am very, very cautious. I'm very, taking a step back. Do I want to be buying, the SpaceX IPO? No, I don't. I really do not. Like SpaceX, fantastic, unbelievable. Elon Musk, I'm a big fan. I think he's, I did really well. I'll tell you, like a huge chunk of the gains that I've ever made in stocks were buying Tesla in 2020. I bought in 2020. It's like, this doesn't look like anything now. I did incredibly well with Tesla when I bought it in the 2020 crash. And I did incredibly well in 2025. In April, I bought Tesla as well. But those are like very rare moments where you have to be incredibly patient for those moments because they come and they go. And, the thing is, if you're the type of person that chases hype, you buy these things, a lot of times those same people are also willing to sell them when they're down, right? So it's a very simple, dumb concept, but the game of stocks is buy low, sell high, as well as buy good quality things that aren't going to go to zero or are much less likely to go to zero. Now, Tesla, those were more trades than they were forever investments. I don't own any shares of Tesla right now. But I figured it was, those were trades, but still, they were stock trades that worked out phenomenally well. And I would argue a large reason for that is because I had the patience to actually buy them when they were in panic mode, not when everyone thought they were invincible. So anyways, I'm not saying I'm keeping my Micron shares in a really long term. I'm just trying to figure out when and where I should sell. With so many different analyst expectations is the hardest part. Yeah, I mean, so here's the thing with Micron, right? Unbelievable run up. Memory stuff is it has the double-edged sword. If it can move up very quickly, it can move down very quickly. Memory stuff right now is in super high demand. It makes sense, right? All the AI things are using and absorbing a ton of memory, all the data centers, etc. The biggest bear case with Micron is that if they figure out how to do stuff more efficiently, where they need less memory, the expectations are very, very high for future earnings of Micron. If anything changes in the dynamic of how memory is needed or less needed, to any capacity, a reduction in need for memory would crash the stock 50% plus. I don't know when that would be. I'm not a tech frontiers person. I just think that, here's how, I'm a momentum trader. So if I'm trading Micron, if I'm trading NAS, if I'm trading semis, if I've got a runner, if I'm trading gold, etc., if I've got something that's running hot for me, I trail a stop because I don't know where something's going to go. If I'm in Micron and I'm trailing stops on Micron, for example, let's just say, let's just say I'm in the stock, I bought it here. And again, you do what you do because I'm not here to tell you what to do with your account. I'm just sharing my thoughts and opinions. Because again, this stuff is very risky and very volatile. The thing with Micron is I'd probably, let's say I'm long, I've got to stop here initially. We move higher, we break, we're back at highs. All right, stop's coming up to here. And I'm going to let this thing run if it wants to keep going, because it could keep going. Like you could see 1,500 on the stock. The market is insane right now. It also could crash down to 750 in 3 days. It's very, very volatile. So for me, how I would play it is I would accept that I'm not going to be able to call the exact top of where this thing goes. I'm going to trail my stop. So let's say we get this type move and we do this, right? I'm going to trail that stop. And then we do this and then we do this. Okay, I'm going to trail that stop. And then eventually we're going to get taken out. And I'm just going to take my gains and walk away. That's how I personally trade. So I trail stops. I don't know where the market's going to go with certainty. I'm trailing stops on ideas that I have. But again, there's pros and cons to everything. In my style of trading, if I'm trailing stops, yeah, you're going to give back a chunk of those gains if you decided to trail a stop and it reverses. You're never going to close out at the top. I've accepted I'm not going to close out at the top. I'm okay with that. Like, I accept that in exchange for never closing out at the top, I will gain the potential to stay in unbelievably big trades that just want to keep going and going and going. So anyways, that is why when it comes to trading, I'm a trend follower, momentum follower. I don't try and call where the thing's going to turn. I just go with what is going. So for gold, right, just last thoughts, and then I'm going to pass it over to James. I have a short position on gold. Generally, we've been in a nice downtrend. Inflation has been on the rise. Yields have been on the rise. But if they stop, if it breaks, I got to get out of this trade. It's really that simple. I generally think that gold has some downside potential. Jobs market data has been strong. Economic growth metrics have been strong. The dollar's been on a little bit of a heater. Inflation's been on the rise. Yeah, you have the Strait of Hormuz closure stuff kind of opening up again, but it's TBD, right? It's undetermined, and we know how back and forth these headlines can be. So for me personally with gold, I've got a short position on. If it's completely wrong, I'll stop out for a small loss. And if it's right, then I'll try and hold on to it and catch a bigger winner. That is my breakdown on gold in 37 seconds. Anyways, guys, we have our next show host here starting in just a second. Mr. James Lane from Elite Traders is going to be going through some trading setups and ideas. Real quick, if you guys are interested in checking out Edge Finder, or if you're interested in joining our VIP group where you can get access to our trade alerts, etc., then check us out over on our Contact Us page. We've just been adding a whole bunch of new ways where you can get in contact with our team. We'll drop a link here in the live stream chat to where you can speak directly to our support staff. You can set up a live chat. You can direct message us on all of the different places. Our team is happy to set that up for you and get things going. So with that said, we are going to now pass the stream over to Mr. James Lane after this quick break. Stay tuned.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1 Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hey, ladies and gentlemen, how's everyone doing? Show me my camera. There we go. Hope everyone's well. Bashi, good to see you. I just saw Ball Out in the chat as well. I've not seen his name in a while. But yeah, hope everyone's well. So I did a little bit of repositioning in the markets. Bashi, yeah, I'm good. How are you? So yesterday we were discussing an idea on gold, which is interesting. Nick and I have got opposite positions here. So I think the idea of being short is obviously completely fine. You know, based on the typical flow and framework that we follow, short gold does make the most sense. So gold is bearish on the edge finder. I'm sure Nick's already run through this with you, so I'm not going to cover it in a whole lot of detail. And technically the trend is bearish, but why am I long? Chess, James. I was actually playing chess while I was waiting to come on stream. 1-1, lost 2, sad times. Anyway, yes, so why am I long gold? Well, it's because we've got a little bit of a regime shift. So I'm banking on the idea that gold's actually going to have a bit of a, not necessarily a rally to all-time highs. I think that's a little bit optimistic, but I do think we've got a little bit of repricing to see in gold. As we're seeing yields coming back to the downside, we're seeing a little bit of weakness within the dollar, and we are pricing in a Fed hike, but I think as far as the research I've done, it's only one by the end of the year, and then we're expecting potentially cuts in 2027. So my idea is a bit more of an optimistic idea over, again, the sort of regime normalization, if that's the right way of saying it. And we are seeing oil coming back down to its pre-war prices as well. So I'm just in the idea that obviously we had the Iran situation here that drove gold significantly lower. That's now coming to an end. Are we going to see basically a correction of that? I think it's possible. And I'm willing to put a little bit of money on the table. So I've got two entries. Sorry, I've got another entry plan. So I'm in this position right now, which is currently at entry. And then I'm looking to maybe scale in. It depends. If this trade starts to prove itself, if the peace deal does get signed and everything's okay, but we do see a pullback to maybe correct this gap and a little bit of obviously natural pullbacks, I'm happy to scale in and round up this position's risk. However, if we start seeing a continuation down, this is technically still a lower high. So if we end up coming lower with no rejections off the fib, we see no promise of any type of turnaround, fine, I'll take a small loss. It's really no big deal. So if we do end up seeing the first option, I'm happy to, again, scale in, add a little bit more risk onto the position and see if basically I can get a really good buy position on gold as we've broken below this 200 daily moving average. I do think there is maybe a little bit of a chance here that we reclaim it and, again, sort of continue a bit higher. So we'll see. But this is the beauty of this stream. You'll get generally well-reasoned trade ideas, argue in all different directions, up, down, backwards, forwards, backflips, all sorts of stuff. So there's always something for someone here. Shells, hello. Not seen you here for a while. Hope you're doing well. Max, cool. Okay, so that's the plan on gold, or the reason behind gold. I'm still in euro dollar shorts. Really nothing going on here. We are seeing again that dollar weakness has come into play a little bit and negatively affecting the position, but I'm still okay to hold the trade. And I've gone against what I've been saying a little bit here. So I've gone short on the pound Australian. So this one, I mean, it shouldn't be any new news to anyone, but I've been bearish on the pound for quite some time, and I still am. I think it's only getting worse, really. Regardless of short-term potential improvements, I think long-term, we're still in a very bad situation. It's only going to get worse and worse over time. So I'm willing to, again, put some money on that idea. And I think the Australian dollar does have good relative strength against the UK or the sterling. So I've got a very tight stop above the daily high here. So I'm happy to just let this one run, see what happens. So yeah, in terms of targets, I don't really have one. There is still a little bit of room here on this weekly time frame for a potential move lower. So maybe back into the previous low here, which would line up maybe around 1.74, give or take. Worst case, well, not worst case, but 1.76, 1.74, I think are reasonable targets on this one. So we'll see how it goes. So yeah, I've got a pending order on the DAX as well, again, based on the optimism, and I'm still short on dollar yen here, but again, nothing's happened. So very boring position to sit through. But yeah, that's it in terms of my trade. So a little bit of repositioning from yesterday when we spoke. I think I was in some different positions or slightly different. So slight move around. Oh, and I'm not sure if I updated you guys, but the Aussie New Zealand position I was in, I was short Aussie New Zealand, looking for a bit of a mean reversion. I ended up closing that one around break even just because I didn't really see any follow through. So I was in a trade. It was I think it was around here, give or take. It was something like this. And once I saw the market starting to pull back towards entry for a second time, I just, just cut the trade. I'm not interested. One of the biggest factors behind that decision was the swaps. So due to the interest rate differential between, hold on, let me get the edge finder. There we go. So if we go to macro scanners and go to carry trade scanner, where is Aussie New Zealand? Here. So as we can see, the RBA has a higher interest rate than the RBNZ with a divergence or a differential of 2.1. So being a seller is obviously costing you money in swaps. So the problem is, if I'm sat in this position and it's just not doing anything, then I'm just losing money until obviously I realize a profit. Then yeah, it's just not really a position I'm interested in. Maybe if we can start seeing a bit more potential and a little bit more of a continuation lower, I could get back into the position. But yeah, for now, I'm happy to just call it and move on and allocate into different markets. Ray, good to see you. Hold on, I think I've missed some things in the chat here. Let me just move my tabs around so I can see what's going on. Okay, so Shells, you're doing well. I'm glad to hear that. We have something. Wait, good thing we have some internal compete then. Alan and James versus the shorter. Oh, is Alan long on gold as well? You're ignoring gold. I think it's a decent decision to make, especially with, again, we've kind of got conflicting things going on. I think the landscape is starting to shift in favor, but the fundamentals are objectively bearish. So it really depends which side you want to take. I'm going on the optimistic side. I do like gold. I like the metals. I've been saying that, for months at this point. So I'm happy to take an attempt where I think is reasonable. GPAUD. Chat's going a bit. Oh, it's okay. GPAUD, I have a great interest in GPNZD. I just got my confirmation now, waiting for a slight pullback. long time, always bullish on gold. Yeah, I completely agree. The thing is, I took that thesis a little bit too seriously because I'm also long-term bullish on metals, silver, gold, copper, so on and so on. But the problem is, I got so in my head about that idea, I missed this downtrend. When you do, it's like analysis paralysis, but not literally in this case. It was more just bias, I guess being stubborn. So yeah, I unfortunately made no real money on this move. I think I made a little bit, but nothing significant, or at least nothing that would compete with, if I threw my bias out the window and just followed the plan, if you will. And yeah, but anyway, whatever. The market's done, so we'll move on. Also, I forgot to mention, Credit Agricole has got a target around 5,420, which lines up with the previous sort of major high over here, give or take. So that's another little confluence. We are getting banks pivoting a little bit more bullish as well. So that's pretty nice. You're looking at copper? Yeah, I like copper. Copper's a fantastic metal. It's got really good industrial use as well as I think fundamentally it could have a little bit of a shift as well, given the landscape I'm talking about with gold. Hi, James. I have a question to ask you. Suppose you said NZD is weak fundamentally, then how will we trade the pair? We get the direction from the. I'm actually not bearish on the New Zealand dollar, so I'm not sure where you got that from. Or unless it's a hypothetical. NZD is weak fundamentally, then how will we trade that pair? We get the direction that fundamentals are bearish, but okay, I think I get what you're saying. It's if you've got the idea of something weak, how do you trade that idea? And this is where the idea of relative strength and weakness come in. So you would want to say, so let's go to the edge finder. Let's say you've got, again, the idea of New Zealand dollar weakness. Well, what is stronger or significantly weaker versus the New Zealand dollar? So in this case, I don't really think there's much, but you have got Swiss. So you could go short New Zealand dollar Swiss, banking again on that New Zealand dollar weakness idea you mentioned. And that's pretty much how simple it is. We're always looking for divergences. It's not about finding the strongest currency or the best currency or the worst currency. We just need to find one that is better and one that is worse relative to each other. And that's basically the whole idea. Check COT data. Yeah, I'll pull it up for you. Let me just read the chat while I leave this on screen. Let me zoom out so you can see. Does that work? I don't think it does. Never mind. Okay, I'll scroll down. There you go. Spending most of my time studying the biotech sector. Yeah, I think we spoke about that, didn't we, Ray, on my weekend stream? Yeah, I've not managed to look at that. Whenever I'm shorting metals, in the back of my mind, I'm hoping it works out so I could buy them at lower prices. That is a very good way to think about it. Maybe I should do that. Look at Nick dropping game. Creating a model on shorting the biotech sector. Interesting. So you're looking for more of a mean reversion approach then. DXY can be bullish, forget the noise from the war. I still like it. To all the gold bulls and bears, may the odds be in your favor. Thank you, Shells. Gold silver ratio hovering near 60. Look at Alan. Alan's coming on after me, actually, by the way. So I'm sure he'll be able to give you a bit more juice. That's why I said supposed to take. Okay, my apologies. So you're just giving an example. Then how will we trade that when we get to know trade time to exit? Okay, right. Let me give you a quick run through. By the way, if you scan the Q, oh no, it's not here actually anymore. But I've got a free course somewhere about the edge finder and the strategy. But let's start from scratch. Let's say we've just sat down. We've got no trade ideas. We don't know what we're doing. But you've got the edge finder. That's all you really need. So all we need to do is say, okay, where the bullish and the bearish. So we uncheck neutral, because I'll be honest, no one cares about the neutral scores. You know, why would we trade something that's got no main driver? So in this case, CAD Swiss, because I've not even checked CAD Swiss, and I've just seen it's very bearish. So what we want to do, we know we want to sell CAD Swiss. We've already got the bias there. We know the fundamentals are bearish. So our job is done in terms of the direction. So we've got no discretion there at all. It's systemized. The Edge Finder tells us. So we go to CAD Swiss. Was that right? Let me just double check. Yeah, CAD Swiss. Okay, so we don't really care too much just yet. We know we want to sell, but we need to go higher time frame. So monthly is bearish, lines up with the bias. Weekly bearish, lines up with the bias. Daily bearish, lines up with the bias. And then you find whatever time frame you actually enter on. In my case, it's the H4, maybe the daily. It depends on the exact market and situation. Now, the H4 doesn't have a trend. So I'm defining that with the moving averages. We've got the 200 that's above the 50 here. We had a little bit of a switch here, and now the 200 is back above the 50. Slightly downtrendy, but not really enough for me to do anything here. We've got equal highs, again, slight give or take there, but yeah, there's no real trend short term. So in this case, I would have to just wait, because the strategy I use, I need to see a follow through. I need to see a trend and momentum going in one direction. So if we could see these lows get cleared out, we see a new low get printed, then maybe on the pullback, I could look to go short. So that would look something like this. So I'd draw the fib from the high, and then I would draw the fib to wherever the low will be. So let's say, you know, we break these lows and create a new lower low here. I'm then waiting for a pullback within the fib, lines up with the previous structure on the left. We've got a little bit of resistance over here. Doesn't mean that much, but it does just, you know, give a little bit more confluence into that zone or the area. Then I'm just waiting for some sort of projection. And that's it. That's the whole plan. Of course, I've kind of simplified it as much as possible, but Edge Finder, then check the trends, and then try and find the entry. It really is that simple, to be honest with you. Nick must be bored today. I've got to say, actually, I don't know how Nick does it. I mean, if you think about what, you know, the podcasts, videos, streams, and then I'll, you know, back end work on the Edge Finder and running the business. I don't know how he does it. I struggle, and I don't do half the stuff that he does. Although I suppose he does have a team. I don't really have that, but still, credit to him. Mostly short-term time frame. It's noise. Yes. Euro dollar short same. Yeah, I think most of us are currently long on the dollar. I've slightly hedged that again with my gold long position, but I would still say the dollar is a good buy. There was actually something that I saw yesterday. I'm not sure if I'll be able to find it. Hold on, just give me 1 second here. Yeah, so JP Morgan is basically said scale into euro dollar shorts on rallies, targeting downside with tight stops. So yeah, JP Morgan is actually quite bearish on the euro at the moment. They're also long on pound dollar. Sorry, not on pound dollar. They're also long on euro pound, short euro dollar. So I think the overall consensus really is just going long on the dollar, shorting things like euro and pound. So I'm happy to stay in the position. Again, I don't think there's really much to do. The trend is still fine. We're still using the 200 moving average as a slight resistance, not perfectly, but you know, the idea is there. So as long as we get continuations down, it's fine. And the other great factor about euro dollar is its negative swap. So buyers lose money, sellers like me or like you are making money just sat here doing nothing. Obviously, we get stopped out. We do lose money on the trade overall, but at least the swaps will just cushion a little bit. A dovish Fed tomorrow could alter the thesis for gold and stocks. Yeah, that is true. Actually, we might get something interesting from the Fed. I don't think we will, to be honest. I am very much expecting just a very neutral, maybe slightly hawkish leaning Fed. But yeah, I don't think so. And the reason I say, actually, let's look at this. The reason I'm saying I think we're going to get a slightly hawkish Fed. I want to say slightly, I mean very slightly. I don't think we're going to get any signals of hikes or anything like that. I think they'll more just be like, okay, things are okay, you know. So we've got inflation that's sticky. So we see PPI here came out at 6.5 from 6.4. CPI, it didn't change, 4.2 from 4.2. PCE also didn't change at 3.3 from 3.3. So inflation-wise, sticky. Again, it's not a case of inflation's rallied or collapsed or cooled or whatever type of terminology you want to use. But then we check the labor market. JOLTS are doing okay. We had a pop-up in JOLTS. We have ADP that had a slight pop-up, only 4K. NFP did pretty well as well. So I don't think there's room really for the Fed to take necessarily a dovish stance, but I also don't think there's enough to justify a very hawkish tone. I think it would be, again, more neutral, slightly hawkish leaning. Just my opinion. As prices in short term are geometric Brownian motions, are they? Ray, I think you're going a bit of my IQ bracket there, my friend. I have no input on that statement at all. Have a small short stab on gold as well. Interesting. It seems like we're very diversified. No, that's probably not the right word. But we're a bit deviated in the chat. We've got some people long gold, some people short gold. And this is one of those rare times where I think both are justified. And it really kind of depends on what's going to happen next. I mean, obviously that's the case in any market, in any situation. But I think in this particular case, as of right now, there is an argument to be long, and there's a very good argument also to be short. But then we could have, the peace deal collapse. And that's obviously going to favor one way. We could have the Fed do something that's obviously going to favor one way. So we will see by the end of the week. But yeah, it is what it is. It's our job, isn't it, to do our best. Truly understandable. Thank you so much, James, for that brief explanation. No problem whatsoever. That's what I'm here for. Hopefully I can make you smile and give you some valuable information while I'm doing so. James, so you short EU like me, but you long gold? No, it's not correlated really, because I suppose not really. So gold, I'm obviously short in the dollar. Euro dollar, I'm obviously long the dollar. So if anything, I'm inverse correlated on the two positions. But they're also slightly based on different things, kind of, not really, but kind of. So gold is not really a fundamental trade. I'm trading gold more on what I'm expecting how I'm expecting the landscape to shift, obviously with the cooler yields, so on and so on. Euro dollar is more just a basic fundamental trade. So the edge finder's bearish on euro dollar, and that's kind of it. You see what I'm saying? So that's the approach I've taken there. Yeah, it can go either way, depends on how you hedged. Yep. And that's actually another point. I mean, if euro dollar, for example, spikes, very likely we'll see gold upside as well. So if one of them gets stopped out, I'm sure the other one will be okay. So I'm slightly hedged in a certain aspect there. So as for trades going forwards, there's not really too much I'm interested in. Euro Aussie, I was looking to be a buyer, but I'm struggling really to justify being a buyer. So I've got my idea of Australian dollar unwinding and that sort of advantage that the AUD had earlier in the year, but there's just no fundamentals at the moment to really trigger me into the position. And the pullback here is lacking a little bit. The sort of bounce from the pullbacks, this upside here, is just lacking a little bit of volume. And we never even came into the 50% retracement, which is obviously my entry criteria for technical side. So yeah, I'm just not really happy to pull the trigger there yet. Silver technically is looking really good for short positions. So there is also an idea, if you're long gold, you could maybe go short silver and again, just hedge off some of that risk. And then kind of regardless of what happens, you'll be maybe break even, worst case. So yeah, well, again, I'm not touching silver right now, but there is quite a nice technical setup to be a short seller. So obviously we had the break of previous support here. We've had the pullback almost retested, not perfectly, but the market's never perfect. And we are currently in the fib zone here. So if we start seeing rejections from this level, it might be quite a nice technical setup to go short. And I think the edge finder is slightly more supportive of that idea too. You're long gold and Nick short. Yes, that's right. Which again is quite rare because everyone, well, I don't want to say everyone, but most people I would assume that watch these streams trade in a very similar way. Maybe not the same technical approach, but at least edge finder, fundamentals, that kind of thing. And the way that Nick and I trade are pretty similar. We both use sort of key levels or support and resistance and fibs and the edge finder. So it's quite rare we'll end up on opposite sides. But yeah, this is one of those times. Why I'm expecting cooler yields, because we've got the peace deal coming in. We are seeing yields already cooling off a little bit. We can see the 10-year here are coming down a little bit. 2 years are coming down a little bit. And if that happens, we're going to get obviously the Strait of Hormuz open back up. Oil will start flowing. Inflation expectations will start coming down. So yeah, I am looking at the moment for yields to cool off a bit. So if we look at the 2 year, Let me go to the daily. What was it? Right here. So let me take the horizontal line. Oh, sorry, the vertical line here. So this was the move. Let me make this big and red so you can see it. There we go. So this was kind of when, this is February this year. This is when sort of the Iran situation started to kick off. So yields obviously took a spike to the upside. Gold was down. The dollar strengthened. We saw central banks go towards maybe neutral, slightly hawkish, depends on exactly which central bank you're talking about. Then we sort of saw this consolidation period, and now we're starting to see yields coming back down. And I would expect that to sort of continue back to sort of the pre-war prices, or pre-war yield price, whatever you want to call it. So that's currently my thesis. It's quite basic, but I think it tracks quite well. Geometric Brownian motion is basically used in quantitative finance, a mathematical formula used to model stock prices by combining predictable long-term growth with random daily market fluctuations. Interesting. I'm gonna have to look into that. I've never really heard of that. So in short term, it is noise. That's why swing or position trading works, right? Okay. Euro pound shorts, I don't know. I've got to disagree on that one. I think Euro pound has a bit more of an argument to be to have a long bias. So let me just draw this up. So as I said earlier, we do know that JP Morgan are currently buying Euro pound. They don't have large targets. I think the target's in this previous high over here, roughly, give or take. But the sort of fundamentals are just not that great. So there's no massive catalyst to warrant us actually taking positions again if you're using the edge finder. So if you were trading this market, you'd have to kind of look beyond the edge finder at the more detailed parts of both economies. So for example, with the UK, you've got political uncertainty. We've got Keir Starmer, which is our prime minister at the minute. It's getting a lot of backlash. There's a lot of calls for him to step down. We've not had a PM do a full term in over a decade at this point. And the economy, generally speaking, is just really not doing well. And this is one of the benefits of when you live somewhere that you trade. So for example, I live in the UK and I trade the pound. It's not just a case of I look at the hard data. I can also actually I can see in my day-to-day life how the economy is going. I can get real people's opinions and thoughts and how people are doing in the current economic climate. And it's really not good. There's people that are struggling to feed themselves. People can't pay rent. There's debt that's climbing. It's absolutely terrible. So there is no way I would want to sit here and buy the pound, at least at the moment. And there's some real structural issues and things, but again, we'll not cover that today because it's a longer topic. So pound dollar shorts, I also think are a good idea. I still am bullish on the dollar, regardless of its shorter term weakness. So I think the daily isn't super clean. So the daily's kind of just stuck in a sideways range. So I wouldn't be looking to do anything just yet on the daily. However, the H4 does look a lot better. So we've got the clear lower highs getting printed here. We've got quite a nice downtrend with the moving averages. So I think what we could be looking to do is, I don't know, let's see. Yeah, I think I would have to draw the fib from this high to wherever the next low will be printed. So again, as we spoke about in the, was it CAD Swiss market? We were talking about this sort of idea of the market breaking the previous lows, creating a new lower low. Then we draw the fib sort of to, wherever the next low will be printed when it breaks these lows, then wait for the pullback and then a rejection continuation lower. I think that's all I could really justify doing at the moment on the technical side. But I think fundamentally it's still a great trade. But the dollar is still strong. Doesn't it make sense too expensive for foreign buyer for gold? I'm not sure what you mean by that. So are you saying the dollar is too expensive for foreign buyers to buy gold? Is that what you're trying to say? Monster? I'm not sure what you're on about. Still planning to move out of England? Yeah, I am, but it's not at the forefront of my priorities at the moment. I've got some other things I'm paying attention to. They're doing a great job of slowly but surely destroying us. Oh, Daniel, you feel it too. Yeah, no, they absolutely are. Let me just double check times. I think I might be the end of my schedule here. Just bear with me. I am. I've just ran over by 30 seconds. So ladies and gentlemen, I've got to head off. We do have the one and only Alan Perez coming to take over the show. Don't go anywhere. Alan is a fantastic trader. You're in great hands with him. Guys, stay safe. Don't get margin called. And I'll see you all tomorrow. Thank you for being here.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good evening, good afternoon. I hope you guys are doing fantastic. Like the ad said there, go ahead and join that free Telegram channel. You guys will not be dissatisfied. I promise you that. We put a lot of work into this. It is great. It is free value for you guys. So feel free to go ahead and join that. And also, too, I will say, go ahead and join the Discord as well. And good morning to all the regulars. Bashi, Raby, Simo, James, fantastic segment, man. Thank you for the clean handoff. All of you guys that are here, all the regulars, I appreciate you guys. And let's get right to it, right? So let's go ahead and talk about, my trade setups, what I'm looking to do, how I'm managing things. And we'll start off with gold. Gold seems to be like a very fun topic here today. Now, the reason why I got into this trade here, if I go down to the 30-second time frame, there was a fair value gap not too far out from here. It got filled. It like swept liquidity, and so that was a pretty good strong basis for me to get into the trade. I'm just joking, guys. I'm just joking. No, the reason why I got into this trade is because you have the prospect of potentially the resolution to the Middle East, right? So we're seeing some developments that we haven't really quite seen before. We have a draft, a solid one, and we're having some confirmation from both sides that the war is going to end. And as a consequence of that, you've seen, oil dropping off a cliff here, now below that $85 handle. So you guys got the laughing emoji. I'm glad I could make you laugh. It was just a joke, but you can see here that oil is dipping lower. You're seeing that yields across the board are dipping as well. I have this upward trend line here for the US 10-year yield. And my thought process here is like, if you were to see a break from this upward trend here, maybe the market's starting to price in a more looser policy, not necessarily rate cuts or anything like that, but just a dialed down version of the rate hikes that we were going to see, right? If we all remember, at one point we were seeing 60% rate hike odds there coming for December of 2026. And that has been scaled back to, I believe, March of 2027. So definitely a good theme there for the rate cut story for the doves out there. And so that's kind of my thought process. If you were to see a breakdown of yield across the board, that could be good for the gold story. So I like it, right? This was, we broke below the 200-day moving average. And I must admit that we are below that 200-day moving average. And as Paul Tudor Jones says, like nothing good ever comes from that. So that is one thing that we have to overcome. If we cannot overcome that 200-day moving average, then I would admit that I am wrong and early in the trade, and I will take my loss. And most likely than not, gold continues to roll over. But this is just an attempt for me to go ahead and go long in the event that the war is solidified this Friday. Oil continues to drop, yields get subdued a little bit, and you get some softness in the dollar. I think that would benefit this trade a little bit. So just my thought process there. Very, very high level. I like this level of support here. Again, if you can reclaim this level of support and trade above that 200-day moving average, then I think this was a pretty good dip to go ahead and buy. And then I'd be targeting anywhere from 5,000, 5,200, 5,400, et cetera, et cetera. Do I have a Telegram page of my own? No, I don't, but I'm very active in this one. So the chart markups that you see here, I do those. The polls at the end of the day, I do those as well. And then there's also bonus content from Nick. So Nick gives you updates on the trade setups that we have going on. You have, COT data here, just some latest updates here when it comes to SpaceX. And if you are, looking to get funded or anything like that, we have prop firms that we work with, and we give you some discount codes there. So everything that you need for your trading to be successful is in there right there. We also have a Discord as well. So just join. It's completely free. And yeah, it's awesome. Awesome. Did I get the Neuralink? No, man, I didn't get the Neuralink. If I did, man, I'd be trading very, very frequently. I'd be catching all of the fair value gaps, all the order blocks. I will catch them all, man. But I don't have the Neuralink, but maybe that's something that I can consider in the future. Yeah, just a joke, just a joke. Alan talking like the Instagram gurus. You know what, man? If you want to up those numbers, you got to start talking like that, I would say. But no, I'm not gonna talk like that. It was just a joke. But I'm glad I can make you guys laugh. Another thing when it comes to gold, let's look at I was looking at this earlier today. Gold to silver ratio. Gold was at one point relatively cheap compared to gold, so I do like to see that getting close to that 60 handle. And earlier in the year, it was right below 60, so something good there, good catalyst. But again, guys, there's a possibility that I am early to the trade if yield stays sticky and the Fed continues to kind of go with that stance of like restrictive policy, potentially rate hikes. That would definitely go ahead and hinder my trade. So I just need to admit that here and let you guys know that the successfulness, or the what is the word I'm looking for, the outcome of this trade is contingent on the rate environment that we're looking for the next couple months into the year's end, right? So just something to mention there. You are getting some bullishness in the dollar, so that's another thing that we need to overcome as well. Dollar index here, the way I'm looking at it here, we are at that level of support here. This was very solid resistance for a very long time. It capped a lot of advances. We finally broke out. We are now retesting into this level after we rejected that 100.5 zone-ish, right? We didn't get to 100.5 exactly, but we got to the zone. We tapped into it, and we are now rejecting it. So there's a possibility as well that the dollar index finds some support here. If that is the case, I can expect for euro dollar to go lower, pound dollar to go lower, dollar yen higher, dollar Swiss higher, and gold lower, right? So that's another thing that we need to watch out for as well. See if this level holds. In my personal view, I am a dip buyer of the dollar, right? Although I am long gold at the moment, I do want to participate in long dollar because I think on a relative basis compared to all the other currencies, I think we're in a very good spot to go ahead and hold rate steady at least, right? We have other countries like, Eurozone or the pound that are looking to go ahead and cut rates at any chance given, RB and Z as well. However, the dollar, I think, is in a good place to go ahead and hold if they need to. I mean, we even got the confirmation that they were able to hike if they needed to, right? So just having that in the back of our minds, I am a dip buyer of the dollar. So if this level holds at 99.5, then I wait for this 200-day moving average here at 98.5-ish, give or take. I think this is another good attempt to go long the dollar if I get the opportunity. And I will go bargain hunting on things like dollar CAD. I like dollar CAD a lot. So if we get a pullback back into this level here, this level of this was once resistance, now potentially turn into support, I would love to buy dollar CAD there. Euro dollar as well. So if this level holds on the dollar index, right? If this level holds right here and we trade higher after the Fed, right? The Fed says something hawkish or restrictive, then that makes sense for dollar to go higher, and that makes sense for the euro dollar to go lower. In that case, I would take my losses on gold, and I would go ahead and repivot into euro dollar shorts. That is a trade that I've been writing on, and I like the idea still. The edge finder is still getting a bearish reading as well on that. So I would go ahead and take this position short here and target this 1.15 level that we tapped into twice already. If we get a lackluster Fed meeting, get nothing, I would like to continue shorting euro dollar at a premium at this level here by that 200-day moving average. I think that's a very good level there. I think the risk to reward obviously increases as well to the downside. And I'm still, longer term, medium to long term, still long the dollar. So I do want to participate in that trade. So it's either I short euro dollar after the Fed, says something hawkish or anything like that, or I wait for a better premium price to go ahead and short the euro. But nonetheless, long dollar is my scenario there. What about Bitcoin? Yeah, let's talk about Bitcoin. I haven't really looked at Bitcoin, honestly. What is it doing? Oh, look at that, guys. Look at that. So, okay, this is awesome. I kind of put this one to the side because it was not doing anything, but it seems like we are now trading back up into this zone here. Let me see what the edge finder is saying with Bitcoin. Nothing so far. Let me see. Is it neutral? I would imagine. Bitcoin. It's neutral. Okay. Quick thoughts on Bitcoin. Bank of Japan. When is Bank of Japan? I know that's something on the docket for this week. They're going to hike to 1%. If you continue to see elevated yields in Japan, which you are seeing, the JP 10-year is up 3% while everyone else is down today. which is good to see. If you were to see yields elevated in Japan and some continued hawkish guidance, I do think that just trickle into high yielding assets like Bitcoin as well, that have been used as an arbitrage opportunity to, borrow cheap yen, pivot that into a higher yielding Bitcoin. I think that story is very much going away. I think that the eyes are, especially now how considering SpaceX is into the picture now, right? I think a lot of eyeballs are shifting from crypto and Bitcoin to AI and things like that. So I think that thing continues to hurt Bitcoin. And so if you do have a higher rate environment, especially in Japan, I think that is a negative catalyst for Bitcoin. So I think, shorting at a premium, a relative premium would be wise. I would have to wait for the edge finder confirmation on that as well, but we are getting close to that 38.2, 50% to 61.8% retracement level in this gray zone here. I would love to go ahead and participate in Bitcoin short. So the level seems to be approaching. We're approaching that level. So I would just wait for the edge finder confirmation, and then I will get the green light to go ahead and short that. But thank you for bringing that up to my attention. Definitely going to consider that if we do get into the zone. So thank you. Both the euro and the USD showing some strength still. Tony, maybe in the short term, but let me show you something interesting. So if we go to the edge finder and we go to economic data, let's go to interest rates data. And now we can do this. We can actually look at two countries side by side what their interest rates are. The US is at 3.75, and the Eurozone recently hiked their rates to 2.4. I think that their rate hike cycle is somewhat to be done with if you continue to see oil lower, yields lower, and this whole idea that the war is going to end. If you get that case, right, then the rate differential between the US and Europe favors US at the moment. You can see here that we are way above them, right? Almost by more than a full point. So that right there gives me that long-term time horizon, the viewpoint of euro dollar to the downside, right? Because over the long term, the way currencies work is money flows into the higher yielding asset, especially too, if you have foreign investors that are looking to participate in your SpaceX, your Anthropic, your OpenAIs, all these IPOs that are coming up, right? They will need to transition those euros or whatever foreign currency into US dollar to go ahead and buy that. So over the long stretch, money's going to flow into the higher yielding dollar. And then also too, if you want to participate in the equity market for the US, you can go ahead and do so by more inflows into the dollar. So I think over the medium to long term, my viewpoint stays the same. So ideally, if you get any pops on euro dollar, I'm looking to short that at any premium. I think that'll be a good spot. World Watch just said 30-second fair value gap. My mouth dropped and questioned my whole trading career. No, man, that was just a joke. Hey, Joshua, how you doing, man? Isn't the same thesis of buying dollar to go to the stock apply for? Isn't the same thesis of buying dollar to go to the stock market apply for gold? Central banks around the world are buying gold. I'm not sure if Jose. I'm sorry. I'm not sure if I got that one. DXY 99 to 100 ascending. Yeah, I think we have some upside to the dollar. I just think not right now. I think there's a chance that if we be patient, we can get some better value. So that's kind of my thought process there. Aussie Swiss short. Ooh, let's look at that. Aussie Swiss. So this is a trade that I took. I got out of it. It's been doing nothing really this whole time. I don't think I would go short Aussie Swiss. Let's look at the edge finder. You said it's bearish, right? Aussie Swiss. Bearish reading -7. You know what, though? I was looking at this, and Sluggy, if you're in here, I was thinking about you the other day. Aussie's yields are relatively weak compared to everyone else. I mean, look at that. It's been dropping off. Let's look at the 2-year in Australia. Yeah, same thing. That actually might be a good play. Aussie Swiss. Swiss basket too has been improving a lot. I'll keep that in mind. Aussie Swiss I like. Looking at global yields here, you can see that they're falling. Aussie falling more than the US. So the US is kind of flat. Canada's lower. Europe's lower. Japan's flat. So very good point out there. I'll keep that in mind. Hey, Marco, how you doing, man? Sorry, I didn't see you were there.
Hello. I'm pretty well. How are you doing?
Pretty good.
Awesome. Not a lot of developments today. I guess this is sort of the calm before the storm, which is going to happen tomorrow with the Fed. And people are looking to see the speech from Warsh. They're looking to get the dot plot as well. One interesting chart that I wanted to show you. So give me just 1 second to try and find it on my Twitter account.
Oh, okay.
So let's just put it back to your screen, since I'm not sure what I have on my Twitter. So, but
A bunch of memes are gonna pop up.
there. Yeah, probably.
Long gold on the 1 minute chart, looking to target 1 to 80,000 risk to reward. Am I reading that correctly?
Okay,
Yeah.
so this is what I wanted to show you. So this is the S&P 500 intraday composite Fed chair's first meeting. So this is what usually happens with the price of the S&P after a new chairman has been picked. So you have Bernanke, I'm guessing that's how you pronounce it. You have Yellen and Powell, and usually it goes down. So that has been the average in the past few instances, and that's pretty interesting to see. So it's very short term. It's just the next sort of 4 hours after the or 2 hours after the event, but still you have free events that happened during a new chairman, and all of them went down.
You know, historically, whenever there's a new Fed chair, the market experiences some drawdown. I think the average is like 9 or 8%, something like that. You have some outliers in there where you have like a huge drop. But for the most part, yeah, the market does experience some drawdowns there. So I'm curious to see how this one plays out. You know, maybe you get the same kind of scenario, maybe, I don't know, but something to look out for. And I, haven't really been thinking about that lately, but that is true that's the case.
I mean, if I had to place a bet, which I'm not really placing a bet, I'm in the geo sell, but I think the war speech is going to be more dovish, and the dot plot will be neutral to hawkish. So I think the rate cut for this year will be raised. I don't think that's going to happen. But the question is, will they put in a hike for the end of 2026, or will they keep it neutral? So are you looking to trim any positions going into the event, or add anything once the dot plot prints, or during the press conference? What's your take on that?
I'm not going to add anything. My position sizing is pretty small already, I would say. Like on gold, that was more of a proactive trade on the idea that, there's a chance that, considering the war is coming to an end here, you have oil making significant progress to the downside. Yields across the board are getting lower as well, softening a little bit. My position was more proactive and speculative in the sense that I don't know what's going to happen, but I have a bias that's going to be definitely no rate hikes anymore for 2026, and potentially no rate hikes at all. And the base case, or the path that we all agree on, is just holding rates until it makes sense to cut. That's kind of my framework, my thought process. So I don't want to add anything onto the table just because that's not confirmed just yet. And if I'm completely wrong, then I would just take my loss there, and I would immediately repivot into something like Eurodollar short. I love Eurodollar short. It's a trade that I love. I've been playing it. The edge finder is confirming that as well, right? It's getting a bearish reading of -5. So I would be very quick to repivot into that and accept my loss, and then just continue writing the obvious that we all say, like the obvious trade right now is just long dollar.
Yep, absolutely. I mean, so I'm in the GU sell. It's small risk, it's not a lot, but I would like to get more dollar long exposure, if I'm being honest. So we aren't really seeing any positive developments this week, and I think the latest post was from Trump, and he says that that he believes that the deal will end up being positive, but it's not like he was super confident. So that's a bit of a red flag. And then again, I know a couple of traders that I follow actually went long on the dollar, which is another sign that I could increase some exposure. So that's what I'm currently looking to do. And EU is definitely the best. I would say GU is this. Well, I would say GU and EU are the greatest ones. USD CAD is, I think, too far away. So I think USD CAD needs to pull back to that 20 EMA. And NZD/USD, I don't have it on the radar just yet, but I'll definitely look into it.
I would say my favorite would probably be euro dollar, Marco.
Mhm.
If you're looking, do you have already euro dollar? I know you're running pound.
No,
Is
no, just the pound. Just the pound.
okay.
Yeah, just the
I,
pound at the moment.
I like that one. That's my preferred one. That's like the best way I could really trade the DXY chart, right, via euro dollar. So
Yep. Yep. Yep.
I like that one as well.
Yep.
I like dollar CAD too, man. Dollar CAD too. I love it a lot, but I just there's nowhere I can get in, and
It's
I'm
a
not
bit
gonna chase.
overextended.
Yeah.
It's gone a lot to the upside. So I would look for a pullback. But then again, if we do get a pullback, a bigger correction, that could be the pivot where you do get a complete de-escalation and the end of the war. So in that case, does it still make sense to buy USD CAD? Well, it depends. What do you think? So if the thing is confirmed to be over, both sides, nuclear stuff is resolved, the strait is open, is USD CAD still a good idea?
Oh, most definitely. I think
Okay.
that the dollar softness that we would most likely see would be short-lived. I don't think that you just
Mm-hmm.
completely reverse and go back to
Yep.
pre-war US dollar, because the fact of the matter is that now what's different is, like, when the war started, inflation was at a certain level, and now we are way above that, right? Um, it takes time for that to get resolved and to get back to that. So no, I don't think like the repricing on the dollar will be so violent that we go all the way back to like 96.5. Definitely not. I think that the
Mm-hmm.
dollar is still
Mm-hmm.
viable on dips. I think on
Okay.
a relative basis, if inflation starts to retrend higher or whatever, because we can't foresee that the US at the moment is in a good position to be reactive to that by hiking rates. Labor market's doing well, growth is doing well, other countries not so much. And so I
Yep.
think that that's a tailwind for dollar to the upside. So yeah, I think the dip, right? I'm just being speculative here. I think a good level of support would be that 200-day moving average. That's like where my eye first goes. So 98.5. So if you do get a resolution to the war, I think $1 to 98.5 makes sense. Maybe 98 as well.
Mm-hmm.
Past that,
Mm-hmm.
then we're no longer. I think now if you get past that, then it's most likely you're getting a combo of the war's over, and then the Fed is being very proactive in reducing rates. Like they're trying to be very forward thinking, kind of ignore some of the inflation figures, or be selective on which ones they choose to go ahead and allow them to cut rates, right? That's kind of where we would be if we're like below 98, in my personal opinion.
Yeah, I think that the only danger of going long on the dollar is that the stop loss gets hit before the overall direction continues to the upside. So just the general outperformance of the US compared to other countries is notable. And you can see it in the numbers, especially with the GDP and how much capital is going into the US to participate in stocks. So it's only a matter of getting the right entry and not getting stopped out if there's an actual de-escalation or a complete resolution, because that would produce a dip on the DXY for sure. The question is how big the dip would be, and it
Yeah.
would be a nice buying opportunity for the longer term. Once we do get a dip, if we do hit, let's say, I don't know, maybe 98, that could be an interesting level.
That's kind of what I'm hoping for, man. I feel like people would assume that just because it's over, that the DXY is now going back to 295 or 96 or whatever the case is. And I think that similar to any sell-off, like when people are overcommitted to an idea, that's when you want to go ahead and buy in. Like when expectations are super, super low on dollar, that's where I want to go in. Simo just put this into the chat here of coming from Switzerland. Potential signing of the U.S. deal of understanding is currently scheduled for Friday. So seems like that is on the schedule. Now we'll see if that actually happens, because I did see something this morning that says Iran made a promise to somebody that they're not going to sign the deal unless Israel pulls out of Lebanon.
Yep. Yeah, I would just like for the whole thing to be over, and that we as traders can go back to numbers and back to the Fed and back to watching what the new chairman does, because it's awful and it's super hard to follow. There's like 10 different news outlets or sources coming out every single day, and all of them say a different thing. And who knows who is buying the influence? Like, you have Trump putting his stuff out there, which is completely fake. Then you have Iran putting their propaganda out there. So it's tough. It's tough. Of course, for any super professional traders, if you can filter out the sort of the reliable news from the noise, you can make a lot of money. But it's tough. It's tough.
Yeah, I put a lot of emphasis and I thank the yields really for helping me filter through all this, because it seems like the market is very, very sensitive to what yields do. And I mean, like, the market clearly is behind this whole war. Like, they've been front running this idea that it's over now. It's gonna be over eventually. You know, whatever the case may be. Rate cuts are gonna come eventually as well. Now, obviously, that was disrupted on that one Friday when NFP confirmed that the Fed can hike rates, but now it's been completely walked back by, you know, so much optimism going on. So I think the market is really just like, they put it behind them and they're like, you know, eventually it'll be over, and if it's not, we'll deal with it when it comes. And so look at that, like Nasdaq's at pretty close to those all-time highs. Is this the dip, Marco? Was this the pullback that the market needed, or was it a lot lower?
I'm guessing this was the dip, because we're back near all-time highs. I'm watching this in disbelief once again, because we already had a dip and I didn't get in. But I can just follow the plan. That's the only thing I can do. And I think the current market environment is getting more bearish than bullish. Of course, if we do get a complete resolution, I think we could get another leg to the upside on the Nasdaq. So I'm actually looking to play it through individual stocks, which is something that I mentioned to you in the Discord, and I have been thinking about just sort of dabbling into stocks here and there, swing trading approach. So I have my watch list that is built, and I'm going to look for some breakouts. SpaceX is exploding up again. So SpaceX is above 200. That's a complete meme. So I don't know. Is it bullish? I guess it is. We have to follow the trend until the bend at the end, as they say.
It was up. I was watching it. It was up 20% in the overnight.
Okay.
And so essentially, Warren Buffett's net worth is like 145 billion. Right? Like he's one of the greatest investors of all time. Very talented, very smart. His whole life was building up, and his current net worth is 145 billion or something, give or take. SpaceX up 20% overnight increased Elon Musk's net worth to that 145. So his net worth increased by 145 billion in one night. So basically all of Warren Buffett's long life work.
Poor Warren.
So I say that to say the moves are real, man. Like the hype is real. Imagine the environment when you're starting to add into the picture OpenAI and Anthropic and Mangoes, right? We talked about Mangoes. Like imagine that environment. So I think that, I think this was the dip. Quite honestly, I think this is the dip, especially considering what's next to come.
Don't say that. I missed it.
No, I think this was the dip, and everyone's talking about AI bubble, but it could only be a quarter full, half full, right? We don't know.
Absolutely.
So I think that was the dip, man. Especially if you do have the prospect of this war ending soon and yields across the board softening a little bit, which we're seeing that here today. I mean, you're seeing a continuation of that. These are all the 2-year yields. Australia, US, Canada, Europe, Japan, all starting to fade lower there. So,
yeah, that's exactly what was mentioned in Market Wizards. Like, there's a bubble, it's going to pop soon, but you have to get in. So you have to sort of, let's say, come to terms with that. Yes, it's a bubble. Yes, the valuations are crazy, but there's money on the table if you can position yourself with a tight stop and a good entry, which is something that I should definitely learn from missing all of these dips, if I'm being honest.
It's hard to do, though, man. It's hard to do. There'll be more. I said it's hard to do. And to your point, there'll be more dips.
I think it's a bit easier through individual stocks, because then, yes, there's a huge correlation between the S&P and individual stocks, the Nasdaq and individual stocks, but you still get the price action that could be a bit cleaner, and you could get some fundamental catalysts that would push the price even more and give you that extra edge, extra confidence, at least. If a stock merges with, I don't know, another big company, or if they get a huge investment, or if they get a breakthrough product, like some of these stocks like Ozempic, for example, or the companies producing weight loss drugs, which is right now super popular. That is a great edge to add on top of the current bullish stock market. So
Yeah, definitely like paying attention to the drivers, the sectors. Like at one point it was semis were ripping, right?
absolutely.
Now you have AI, whether it be biotech or whatever, like understanding that the environment that they're operating. Is it a hot market for mergers and acquisitions, right? Like, are there a lot of deals being made in the summertime, whatever, for that specific industry? That'll definitely help there. But yeah, Marco, it seems like I am getting here over my portion of the segment, so I'll leave you to it. One thing I will say, guys, before I go ahead and pivot out, once again, I invite you to the Telegram and Discord. We'll put the link here in the description. There's a link for the Discord there. And let me go ahead and put the Telegram one as well. It is completely free value for you guys. So definitely go ahead and join. And we, do our best to give you chart markups, polls, discount codes to all of the, services that you may need, whether it be prop firms or anything like that, or A1 Trading's prop firms or A1 Trading's A1 Trading's products. I definitely invite you to go ahead and take advantage of that. And also to get yourself a copy of the Edge Finder. It is a phenomenal tool. It has helped me so much, Marco, as well. And use the code either Aspire or Marco, whichever one works. We just want you to have it and take advantage of it. But thank you, Marco, for the segment. And I'm very excited. I'm very excited for tomorrow.
Yeah, we'll do the segment tomorrow and we can get prepared for the meeting. Should be a big one. Absolutely.
I think so, man. I'm very excited. And I honestly, I don't know what's going to come. It's his first meeting. I don't know how he's going to speak, how he's going to articulate himself. So I'm very interested to see that.
Yeah, and he has to suck up to Trump at least a little bit. I mean, the guy picked him for the position, so he's going to have to do it.
We'll see, man. We'll see. But all right, take it easy.
Yep, you too. See you. Bye. So I want to mention the sponsor of today's video, which is Ola Prime. So if you're looking to get funded, you can get 35% off with the code A1 Live. Okay, so let me just put it in writing here. So Ola Prime A1 Live is 35% off. Okay. Now Ola, first, they don't have a consistency rule, so it's pretty good for swing traders. Second, their Trustpilot, they have a score of 4.5, which is very, very high in terms of prop firm companies. So they are a new prop firm, which I always say to people, be very careful with new props. But if they have good reviews, if they have, and I think they have like 2,000 reviews on Trustpilot, if they have good rules, if they have a good price as well, and if they don't have a price that is extremely, let's say, low, extremely cheap, because those are mostly scam firms, but Ola Prime has a good competitive price. And then if you slap on the A1 Live code, you get 35% off. At that point, it does become a very enticing deal. So the link is in the description. Check it out if you want. And now let us continue with the stream. Let me first see if there are any comments. USD JPY can give you all the dip needed. The trend that we have been seeing on the equities is the reason why smart traders are most likely to miss trades opportunities, because we always try to be skeptical rather than following the trends. Ola Prime have been really, really cheap, which surprises me, but they paid so far. I mean, I looked at the price. The price is lower than FTMO, but still okay, still competitive. It's not super crazy cheap. With the code, it does get pretty nice, but that's a different thing. So that's a deal that A1 has with Ola Prime. And what is the most important is the Trustpilot reviews. What I wanted to go through is the watch list. I have GU, I have the sell. It's not doing anything. It was pretty close to the stop loss. Now it's pulling back. So this thing, I'm going to keep on holding it for now. Personally, looking at the whole Middle East deal, no deal, de-escalation, escalation, Trump apparently is signing the deal with himself. I don't know. It's too much information. So I'm ignoring the headlines and focusing on the numbers. The numbers are 37 times so far. Trump has announced a deal and no deal happened. So yes, 37 times could be the charm. Absolutely. But the numbers are saying that maybe there will be a 38th, 39th, and even the 40th time that we get a deal. So that this one falls through, essentially. And if you traded Trump's tweets about a potential deal in the last 3-4 months, I think you would have made some nice percentage. And economic data, of course, inflation. So if I go to the Edge Finder, let's go to the Edge Finder. Let's look at the inflation print, economic data, inflation, CPI. It's absolutely elevated, and it's getting higher, 4.2, and going higher. The PPI, which is usually a precursor to the CPI, is at 6.5%. That's, I mean, way above target. The target on paper is supposed to be 2%, if you didn't know, but the real target is around 3%, because we have been above 2% for 3-4 years now. We can go back, let's go back 4 years. And we haven't been near, or we haven't hit the 2% target in more than 4 years. So the new target is somewhere around 3%, but they don't wanna say it. Okay? Because of all of that data and those numbers, I'm just gonna stay risk off, stay positioned long on the dollar, and I also have USD JPY 160, close to hitting 161, at which point I will execute a sell position betting on a possible intervention. So this particular trade would be a pure play on a possible intervention. It wouldn't matter with the fundamentals or the numbers or the data. It would just be a play on an intervention. So I have to get the alert first. The Nikkei is at all-time highs. Did I miss the boat? Maybe, but it just didn't fit the plan. It absolutely did not fit the plan. Both of these dips did not fit the strategy. So I have it on the watch list. One thing that I would love to get is I would love to get a bullish print on the Edge Finder. So let's just take a look at that. Nikkei, neutral, and let me check the Nasdaq as well. Nasdaq, bullish. Okay, so the Nasdaq is bullish, which is interesting. You see the price, I think we have moved off of the 20 MA. Yeah, we definitely have. So I'm keeping the Nikkei on there because my favorite index is the Nikkei. I think it has been moving really nicely in the past, and I would like to participate. It has been beating the S&P as well. The government in Japan is super dovish, kind of similar to the Trumpster. So that's good for the stock market. That brings a lot of capital into Japan. A lot of fundamental reasons for me to be long. As I mentioned, I am starting to dabble in US stocks. Swing trading approach doesn't take up a lot of time, but if you're wondering about that, I'm using the stock box. So the way that I build the watch list, which you can see right here, is I use the technical screener, and then I go to the heat maps. I usually look at the daily, or not the daily, but the weekly and the monthly heat maps. And then I look at the biggest stock moves, and then I see how the price action is doing, right? The main thing I'm looking at here is a breakout. So I need a leg to the upside, I need a consolidation, and then I'm looking for a breakout, a clear breakout of the structure. So I'm looking for all-time highs, preferably. Yeah, definitely. All-time highs would be the best. So the best things I have is Intel, microchip technology. It looks good. Amcor exploded up today, so this one is out. I don't even think I can trade this one on my broker. So yeah, this one is done. Gonna remove it. GFS, so Global Foundries, looks good as well. Nice bullish move, consolidation. So this is one way that I'm playing stocks, but not through the NAS, not through the S&P, trying to get a bit of a bigger edge. And today with artificial intelligence, if you want to do fundamental analysis, I mean, using Google Gemini, you can get a lot of information pretty quickly. So one more thing that I'm confirming is I go to the stock box, I go to the stock scorecard. So if you look at, for example, Intel, what's the ticker for Intel? INTC. Okay, so INTC, TC. Intel, right now neutral score, so I would prefer for this to print bullish, but it was bullish, I think, yesterday. So this is a great confluence as well that I'm looking at. If you want to get the stock box, there's a link in the description of the stream, and you can use the code Marco to get 25% off. The code works for the stock box and for the Edge Finder. So if you're a user of the Edge Finder and you want to get into US stocks, you'll love the stock box because it has everything you need, but for stocks, essentially. So it's a similar sort of structure, but for US stocks. Now, the reason why I'm starting to get into US stocks, a big motivation has been the New Market Wizards series. So the New Market Wizards book. If you haven't checked it out, I highly recommend you to read it. If you look at the top traders in the book, most of them made most of their percentage on US stocks. So, and they have a swing trading approach, which doesn't take up a lot of time per day. So I thought, why not expand a little bit, try to capture some more alpha, and try to get into some stocks. The two strategies that I'm looking at is first, a simple breakout strategy on Intel, for example. So let's say we get a bullish candle like this one, that could produce a nice entry. And the second one, which is definitely harder, would be shorting. So shorting stocks that have exploded like Avis. So Avis this year in April, crazy rally to the upside. There wasn't really a massive catalyst. There wasn't really a valid catalyst for this move. But if you time the short correctly, put the stop, I don't know, above 1,000, well, you could have made some decent profit. Now, this is very, very hard. So this is something I have to work on, backtest and research in the background. But simple breakouts, bullish price action, trend following, I've been doing that for years now. So it's not really going to take up a lot of my time. That doesn't mean I'm going to slack off. I still have to put in the work. Michafit says the yen rate hike seems like it didn't really matter. I wonder if Japan is in pressure right now. Yeah, so the rate hike doesn't really matter for Japan. I don't think I've mentioned that before, but from my research, they can hike all they want. These 25 basis point hikes, they don't matter. The market doesn't care. So my advice, ignore that event. Focus on the price. Look at the 160, 161 level. The dollar is very strong. The yen is still very, very weak. And they can hike, but the rate is still negative. So if I go to the Edge Finder, go to the scanners, carry trade scanner, or the real yield history. Let me see. Let's see, our Eco Surprise Index. Is it here or is it Strength Index? Okay, so here it is. So the difference, the real yield, and yeah, the real yield. I mean, look, if you look at the interest rate, which has been bumped up for Japan, it's now at 1%. Let's go to the calendar there. So BOJ, it's now at 1%. Okay. Inflation is running at 1.4, right? So these 25 basis point hikes are not doing much. You still have a lot of room in the carry trade. So there's still going to be a lot of traders. If you look at the carry trade scanner, USD JPY. If you look at the carry trade scanner, the opportunity is still absolutely there. So the base rate may even increase this year. The quote is going up, so it's now at 1%, but the divergence is still pretty high. So it's currently at 2.75%. And that means the carry direction is a buy. That means there's going to be capital flows, buying the dollar, selling the yen, making USD JPY go to the upside. Okay? That's it for my segment. Thank you very much for watching. Don't go anywhere because you have Tiger coming on in 30 seconds. So let's see what happens tomorrow. I think it could be pretty volatile, pretty interesting. And we're going to get the first speech from Kevin. We're going to get the dot plot, which is more important in my opinion. The speech doesn't really matter much because Kevin will try to sound dovish, in my opinion. The dot plot is what the 12 committee members think. So join us tomorrow. Good luck in the markets. And yeah, I wish you to have some great trades. That's it. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Tuesday. Hope you're doing well today. Already had to turn my phone on silent. You guys know I get calls every single time I'm on live with you guys. So let's get that sucker turned off, get my alarm set so I don't overshoot the runway as always. Ladies and gents, let me know if you have any tickers of interest. Hey, being in Tornado Alley, we got some more storms coming up this week. We had tornadoes over the weekend, had one hop over my house, hit us about 5 miles to the east. This morning, I got the this awesome photo I took, just to show you real quick of what I have to put up with, of this crazy looking cloud above us. It was just rolling. It was just rolling sideways, looked like a big long string of cotton. And it just floated right above my head. So that's what I get to put up with for the day. Looked like a sideways tornado, but thankfully it didn't drop on me. So welcome to Kansas. Welcome to Tornado Alley. Anyway, thought that'd be interesting to show you guys. Obviously, last night had our Bank of Japan or Reserve Bank of Australia statements come out. Obviously, Japan raised 25 points, which they're at 1% now, which is their highest level since 1995. Remember, they were notorious for being in the negative, but they're finally playing ball like the rest of the countries. So they are up to 1%, a little bit of a hawkish tone with that conference. And signals, of course, of further gradual tightening possibly later this year. So they're, of course, both countries mentioned this, focused on fighting the persistent inflation. So that is the war they are in. And as far as the Reserve Bank of Australia, they did, of course, remain unchanged at the 4.35%. That's a pause after 3 straight 25-point hikes. So they're kind of cooling off a little bit, acknowledge cooling economy, but again, mentioning that inflation is still too high. So same thing out of both countries. Big bankers over there, hawkish hold. And that's about what I got from that when I dug through the notes. Dollar yen descending, 160 to 159, says Anton. Yeah, let's have a look at that here in a second. In fact, I was just resetting and refreshing my Edge Finder since I didn't do that yesterday till somebody pointed it out. We did get New Zealand CAD pop on the list for a +5 since this morning when I woke up and started it, refreshed just a little bit ago. And I was taking a look at New Zealand CAD, and looks like we might have a play on our hands, ladies and gents. Just need a little bit of a discount. If I go find New Zealand CAD over here, and as always, starting off with my 2 chart look, daily on the right, Look at that. That's about as pretty of a series of higher highs and higher lows as it gets. You can see that pattern a mile away. So the important thing to note is obviously the higher highs and the higher lows, and the moving averages. 8 is above the 21 with the alligator's mouth opening to the upside. So that's what I like to see if I've got a bullish bias asset on the Edge Finder. A little bit of zone of demand down here at the bottom. Let's go move this over to a 4 hour. Oh, no, I guess I had that. Well, there's a 4 hour look. If I go like this and incorporate that full 4 hour candle, think of it like a fat doji candle. And then, of course, we had our gap above it. Drop that thing down to a 1 hour, though, 4 divided by 4, which is 1 hour. And I actually kind of isolated this upper section here. So you talk about a pretty looking zone of demand. That's what that is, guys. You got your basing, you got your strong leg out, got a gap here as well. You had your volume starting picking up, the tick volume, the volume spread analysis, and broke some minor structures here. Or major, I would say major structures. I guess this one did break this double bottom over here, talking about this this structure here. So the important thing is we broke this structure and this structure and this structure and this structure and closed. So there you go. You had a lot of structural breaks. And this is, again, what takes a lot of money to happen. It takes a lot of money breaking structures. And then it breaks several structures in a row. That sounds like a pretty good series of candles to me. Big green expanded range candle. Then you had a couple more green candles thereafter, which, of course, broke the structure and closed. So I really like this area on Kiwi CAD. Talking about the 81 level, 81 psychological number. And so, yeah, that's going to be probably one of my favorite looks going throughout the rest of the week. On the 4 hour chart, the 50 EMA is above the 200. And if price drops, it's got to be forced to pierce the 200, where there will be a series of buyers waiting to buy as well, thereby sticking their stop losses where? Underneath. Putting their sells down, putting their sell orders. So we'll just kind of move the 200 EMA forward, just projecting it a little bit, and that's what I would be looking at, guys. So come down, sweep liquidity, and because the buyers, the big banks, the institutions, if they're trying to jump onto this Kiwi CAD area, they need sell orders to fill their buy orders. They also need unfilled orders for a possible buy up. So that's what I'm looking at. Holy cow, I didn't mean to do that many. That's what I'm looking at for this new entry on the Edge Finder. Do that again. Just take it up to the swing high here. Don't get too greedy. Just take what the market gives us. And we don't really have a supply zone that's formed yet. So if we get one, then I'll reevaluate it. If we don't get a good looking supply zone, hey, I'll just take it to the top. Take profit up here at the top. So that is to be determined. Don't know yet because we got to see how price falls into that area, if it even does at all. Right. So that's going to be my updated look at the new entry that we got. You mentioned dollar yen. So dollar yen is still pretty well neutral, but we'll take a look at it. The thing that I still don't like about dollar yen is it is still in this daily supply zone. Okay. One of the last intervention spots where price fell. Like we've mentioned a time or two, a few of us here on stream, guys, every time they've done some intervention, talking about the Bank of Japan, it's immediately gotten bought right back up. So they can't keep this intervention activity down. It just keeps pushing up. And you guys know, because I've mentioned this for a while, but still keeping an eye overall. And I don't know why that didn't save. Still keeping an eye on this supply zone up here. This is a weekly daily supply, that 161 and a quarter level, where if intervention is going to take place in a hardcore spot, I would see that as a possible spot. But I remain just neutral overall. I really still want to just see that break and close above it. Okay. So far, they've had no success with the interventions. Now, could they be doing a much larger order up here? We shall see. But nevertheless, if we get a break and close above, then I'll reevaluate at that point for possible buys. But I just don't like it right now because of the fact that we've been in a 2-week supply zone. In that supply zone, I should say, for 2 weeks. Going back to the end of May, really. It's just been sideways. Okay, it's fighting this. It's fighting these orders. And remember, on this daily candle, the leg out that we had on that intervention move, look at all the volume. Okay? It's a ton of volume. That's central bank volume, ladies and gents. That's straight from the central bank. Intervention, central bank activity. Okay. So they're trying to go down, but they just can't keep it down. So there's absolutely no way I'd be wanting to buy in this area in a supply zone, in an intervention central bank supply zone. Okay. Those are the strongest of them all. Financial institutions, hedge funds, obviously pretty strong, smart money, but nothing, absolutely nothing beats a central bank. Would you guys agree? They've got way more money than a lot of the hedge funds, probably most of them. Okay. Talking about a whole country fighting this. So, yeah, still pretty well remain neutral on dollar yen. It's not even on the list anyway. Last time I double checked. Yeah, still pretty well neutral. Just got that Dow. Let's go back to the list over here. The Dow, the Nasdaq. We still have yet to break that structure on the Nasdaq, but the Dow we have. And I got to be honest with you guys. I was real close to placing an order on a 15-minute demand zone last night, but I absolutely did not like the volume. Let's see. Let's go to, yeah. Okay, so remember I talked about flip zones yesterday where we had this supply zone over here. This was actually a 4-hour. This 4-hour supply zone that was the potential take profit at the time to this demand zone, which actually worked out. So we broke the supply, closed, and then we retraced. And now on a 15-minute, we had a flip zone create itself. But the problem is when price entered the zone, it was later in the evening here. So after hours for a U.S.-based asset that primarily trades, obviously, in the U.S. intraday session. So there was no volume down here. Absolutely no volume. If I look at my volume spread analysis by itself, this is about as ugly as it gets, guys. There's obviously your intraday volume. And then when price entered the zone, there was nothing there. So I didn't feel comfortable pulling the trigger when we bounced in right here. Now, we just barely missed it a little earlier in the day at 2:45 my time. So that'd be 3:45 New York time. Just missed it by like a piece of a point. It's kind of hard to tell that, but if we zoom in, we just barely missed it. Well, then it finally came around. It hit my alert, and I watched it. But again, I didn't see any volume step in. So I personally ignored it. Hindsight's 2020. We don't live in the past. Obviously, I should have taken that trade, right? But I didn't break my rules, guys, because my rules state that I need to see some type of institutional volume stepping in. Well, with the institutions closed at that point, or at least the bulk of them, okay, there's obviously some after hours trading, but I just didn't want to jump into that. So I didn't break my rules. Effort did not match result, but it just goes to show you the strength of these zones. Sometimes they work anyway. Okay? But c'est la vie. I'll regroup and see if I can't find something new. Let's see. So that was and again, the whole reason I was interested in it is because it broke the structure. But unlike Nasdaq, which is the other bullish item on the list, the Edge Finder, okay, so far it still hasn't broken that structure. So same thing applies. I personally just want to see that break a structure and close, possible retrace down into a deeper demand. I think that'd be an awesome discount zone if this happens, if this piece happens right here, guys. Okay. And again, if we don't get that break a structure closed, it just drops right in. It's still a trade, possibly just cutting down the risk. Okay. Just tiptoe into the cold water, so to speak. All right. So that's the bullish items. What we got? Let's take a look here. Pound Swiss. Okay. All right. Big Wiz. I like the name. Big Wiz for life. Please do a review on Pound Swiss. And then Andrea's also got Pound Dollar pullbacks at the 135 area. Yeah. Let's take a look at that. Pound Swiss first, ladies and gents. Where you at? Where you at? Where you at? I got them alphabetized, but sometimes it still takes my eyeballs a few seconds to find it. We'll start with the daily. The right. So when we're just looking at the trend, we've obviously got a higher low right here. And we got a higher high. So by definition, well, actually, this kind of reset itself right in here. So this would technically be the high. So higher high. So we're in an uptrend. We've got the 8 EMA above the 21 EMA. So that's kind of that mechanical confirmation I tell you guys about. But the challenge is, as you can see, we're bumping into something overhead. So let's go back to a single chart look. Overhead supply way back here. What is this? What is this? What is this nonsense we bounced into? Okay. We bounced into this over here, this little critter. So this was a consolidation with a decent candle out. And then we had a Sunday gap to the downside, broke some structure, it looks like, but it quickly retraced. Now, what about the volume on this candle right here? What about the VSA, the volume spread analysis? If you follow all the way to the bottom, you see a smaller green candle than the consolidation to the left, right? So when I see that, I'm not really that worried about it. Okay. Effort didn't match result. In other words, this supply zone doesn't really look as strong as it looks physically. Okay. Got to dig a little deeper. We got to look at the effort. We got to look at the volume. In this case, volume spread analysis, since we're dealing with currencies. So in other words, I'm not really that worried about this zone. Okay. It's drawn there, but it looks fairly harmless. But even as harmless as it looked, it's still getting a little bit of reaction over the last 6-7 days to the downside. Okay. So, but when it bounced into the supply, it's not like the bottom just fell out and it just completely plummeted. It dropped a little bit, but then it retraced the biggest portion of it. So it's just kind of dilly-dallying sideways. That's just a descriptive way of saying, yeah, we got a little reaction. I don't think I'm too worried about it. So I would probably be okay buying against it. Okay. We've already broken this daily supply, which was a 4-hour confluence. So we got to have some type of strength somewhere in here. The challenge is these candles are not really the prettiest. I don't really have any strong looking 4-hour zones of demand. So I'm going to have to go down to a smaller time frame, see what I got. Now we have a Sunday gap down right here from June the 7th. So maybe we can drill into this area here on a smaller time frame. Let's take a look. June 7th. Let's go have a look. Okay. So now we're looking at this area here on June 7th. Now this is giving an interesting candle. This is the gap down. This is the base. And then this is the push away. There's no volume though. Okay. There's no volume down here at all. And did this zone, it is by definition a zone because it did base and then we had a strong gap up. So for a minute, this was a zone. It just wasn't a very strong zone. Remember, not every demand and supply zone is strong. Okay. Wasn't strong. And the other thing is, did this zone not create because of this old zone over here? This was a demand zone. And that's why that zone was created. Okay. It gapped down. It had a strong gap down, but it gapped right into another demand zone, which had a structural break. So there was some underlying strength there, guys. Okay. So I can't utilize that in good faith because it was created from another zone. I prefer zones that create themselves. Okay. So I don't like that area either. I can't utilize that area. If I don't like it on a 4-hour and I don't like it on a 1-hour, the last thing I want to do is drop down to a smaller time frame when price has already bounced off that overhead 4-hour zone much further up. So at this point on the way down, what's it creating? A little bit of a smaller time frame downtrend. So do I want to fight a downtrend on something lower than a 1-hour zone? Probably not. It's too far away. So I don't like any of this, guys. Now, there's probably other trading strategies out there that can capitalize on it. One strategy on its own is just simply getting a bounce off the 200 EMA. But you guys have already seen where I've explained that the banks use that as liquidity. Okay, banks know that traders like to buy off the 200, not to mention a lot of other moving averages. So, there's a lot there. But point is, I don't want to utilize the 200 EMA bounce by itself as a reason to buy when I don't have unfilled orders. Prices move based off of unfilled orders. It moves based off of the supply and demand bounces. Okay, where those basing structures take place, demand heavily exceeds supply, and there's leftover orders there. So what else? Is there anything else in pound Swiss? Probably not till we go a little bit deeper. Okay, and that could take a while. Okay, pound Swiss. I don't know. How many ATR is that? Yeah, it's only 50 pips. So this thing only moves about 50 pips a day on average. And even if we go back down to this basing structure at the bottom, okay, that's 117 pips, we'll call it. So that's at least 2 days worth of action just to get there. But by then, probably going to flip a lot of things. We're going to start getting the red EMA, which is the 8, which is the slower one. It's probably going to start angling downwards. That's the alligator shutting its mouth, and I just don't want any part of it. But I got to say, the demand does look pretty good. So I am going to at least draw that up because this is our daily demand right here, all the way at the bottom. It's a little bit wide. And then, of course, we got the 4 over here. So do I have a 4-hour? Do I have a confluence? Number one. Not really. Not really. This wick right here touched the second candle. I don't like it. What about 2-hour? 2-hour? Okay, let's see here. Okay. Might be reaching, but there is a couple zones here. Okay, we do have a 2-hour here. So there is a 2-hour demand. Down here at the bottom, at the true origin of this strong move down, is another one. But again, it bounced into a zone itself. So did it create itself, or did it just create itself based off of bouncing off of another zone? Okay, this was a demand for a while. Right here. All right. That's clearly where this zone bounced. So I don't like, because it bounced off of it, I don't want to utilize this candle. If I can get it to go where I want it. I don't want to utilize that candle as a demand. I'm talking about this green candle here. Okay. Left a gap, but again, it bounced off another zone. So I don't like it. To me, that's mitigated. To me, that's efficient area. So I would probably stick with the upper end of the daily, but there could still potentially be some unfilled orders in here. So I have to acknowledge that. So if I were to buy that area, I wouldn't want to choke this thing out and put a stop loss just directly under the demand itself. I'd probably have to incorporate the whole thing, guys, and then take this thing clear up, get a 2-to-1 or a 3-to-1 back up to the swing high. So that's a ways away. Again, 117 pips away. ATR is only 50 pips. That's probably at least a 2-day move just to get down there. Off of, and remember, it bounced, all this coming from bouncing off the weak supply zone. So if I just project this thing out on the pound Swiss, bounce into here. And we got our demand right here, our 4-hour confluence. So that would be where I would probably look to buy. Not financial advice as always, but the 105 half level, you might keep an eye on it if we get a bounce down, a drop down. Yeah, you're welcome. Absolutely welcome. What else we got, ladies and gents? We went over Dow. We went over the NASI. We went over pound Swiss. Wanted to take a look over here and get kind of a refresh look. Euro Swiss, was that what I saw at the very bottom? Let's go have a look at this stuff. Guys, Friday is the signing in Geneva, Switzerland. Over the weekend, they obviously electronically signed in principle the MOU, but remember, that's just in principle. We got to have that handwritten liquid ink signed by both parties on Friday in Geneva for it to be official. And then they got to abide by it. And that goes for both sides. It goes for the U.S. and Iran and Lebanon and Israel. That's a lot, guys. Do you think this is going to hold up? Do you think this deal is going to hold? What do you think? It's a very volatile thing. It's a lot of moving parts. It's a lot of parties and counterparties. So while the MOU signing in principle electronically was great, the document will be better itself, the physical document where they can shake hands, kiss and make up, give each other a hug, maybe give each other a box of chocolates or something. But then you got a 60-day period where a lot of stuff has to get done to keep the tolls free, to keep the whole deal intact. And we already have seen how Iran can be about delay. So even after we get this signed deal, I'm still cautiously suspicious on it. I don't know about you. I've heard some other people kind of say similar things, and that's kind of where I'm at too. So at the end of the day, you know what? At the end of the day, even with that, when we got all these possible variables, what matters? What matters? Is it not the data still? Is it not the price action? Coming back to the data, the hard data. Okay. Trust in the edge finder, trust in the top setups. Because even after the deal, there's still questions. So we might as well just follow the hard data. You know, I've been kind of going back and forth with it myself, just in my head. What do I pay attention to the geopolitical drivers? Do I pay attention to the to the hard data? And if I've got those questions, I know there's a lot of other people out there that have the same questions. So at the end of the day, follow what's facts. And what's facts is the hard data. Okay. So anyway, just thought I would mention that off to the side. But let's take a look at some of these others. CAD, Swiss, we got gold still down there. Gold, I'm still waiting on a little bit higher of a supply to get hit. Not the one it's currently in, but the one that's higher up. So let's go to a 4-hour. Still keeping an eye on that. I just didn't feel very good about this area, guys. I really didn't. Again, it was a lot lower on the curve. If I draw up my curve analysis on that note, well, I have to realistically draw it probably something like this, swing high to swing low. I'm just looking at it on the 4-hour look. Now, we could go higher time frame, but if I'm just looking at this kind of immediate area, just kind of looking at this swing high here, swing low here. Where's this supply zone? It's in the middle. What do we not do in the middle? Diddle. Okay. Waiting for the premium. This supply zone is up in the premium. So that's why I'm waiting on this one up here. 44.28. So nothing has changed on that front. And I do believe silver is on the list. Yeah, let's go have a look at silver. Silver's going to look very similar. Got a zone up here as well. Swing high up here in this area, swing low. This is closer to the premium. It's just a little funky looking of a zone because the only other real option I had would have been this itty bitty tiny little tiny candle. And there's no volume on this. No volume on it. No VSA. This one at least had volume on this leg out. So that's why I kind of put this 4-hour confluence kind of half in, half out of the daily. So it's obviously not going to give the greatest reward to risk because I have to now put my stop loss most likely above the daily, which is a lot further. It's just out of whack. That's why I'm sticking with gold, guys, for the supply zone look. It's just a prettier look. And I've got an easier spot to draw in my swing high on this 4-hour chart. Swing high, swing low to find my premium zone. Okay. So gold it is. It's just waiting. It's not too awful far away, but we'll let it do its thing. S&P. Yeah, let's look at it. So S&P is probably it's the least interest I have personally. And number one, it's because it's similar to the Nasdaq. It still hasn't yet to break this overhead structure. Okay. Now it's given us a discount. It's given us the discount, but it really didn't. It bounced. Okay, so here's the deal. So with the S&P, it did bounce into a daily demand over here. That's clearly where we got the rejection, the bounce back up. But when we drill into that daily on the smaller time frame, it's the 4-hour look I had no interest in. Because again, we have a nice strong uptrend, no doubt. But the candles, the individual candles have been just there hasn't been any expanded range candles. Like this red candle is about as expanded range as it gets, or maybe even this green one over here. Expanded range just simply means it's bigger on average than the most recent candles by like 2 to 3 times. Okay. That's expanded range. It's showing where the buyers or sellers heavily won that time frame, that candle. Okay. So on all these green candles exiting that daily demand, they were just tiny. There was nothing expanded range about it. There was no strong gaps. Okay. So that was the spot that would have been of interest. Again, it was good on the daily. It just wasn't good on the 4-hour. So I ignored that. And as you can see, sometimes the daily doesn't need the other set of eyeballs. Sometimes it'll bounce and just spike. Okay. Got it spike. It's where the rumors started swirling in that we were getting a deal. And that's where we started getting liftoff. But now when it comes to S&P, what have we bounced into? Daily supply. So again, same thing rings true. I need to see a break of supply and close, and also a break of supply of the swing high, since it's not that far away, for a possible retracement. And this is just looking at the technicals, guys. Okay, because we so far don't have it over here on the Edge Finder yet, but it's probably close. If the Dow and the Nasy's on there, it's got to be close, right? So where's the trade? Well, the trade is going to be, in my opinion, down here at this demand. Okay, this 4-hour demand. Didn't really have a daily to work off of as far as a higher time frame confluence. So I got to look at 4-hour, 1-hour. Okay, 4-hour, 1-hour. So if I move this to 4-hour over here on the right instead of the daily, all right, the 8's above my 21. That's good. Got my 4-hour over here on the left. I got to find a 1-hour. Do I have a 1-hour confluence inside of that 4-hour? I do, with the volume. with pretty good volume. Okay. So that's a good look right here. So this right here, that white line would be the proximal line of the 1 hour demand, giving us the gap. Both of these time frames give me my gap, my acceleration gap, my fair value gap, my runaway gap to the upside, showing that demand heavily exceeded supply. Broke some structures, kept going, broke some more structures, broke this strong looking supply zone. Look at that. We gapped through this strong supply zone. Look at the volume to the right of it. Look at the expanded range candles. Look at this. Strong push up, gapped through that. Okay. So I like the start of this. I like this 4 hour look on the S&P 500 on a technical level. Again, only, and I'll end it on this, only if we break the structure, break through the rest of the supply, break the swing high, close, and then get a retrace for a buy like that. So that's what I'm looking at, ladies and gents. With that, tomorrow got a big day. I'll actually be on a little earlier than normal. So looks like James will kick it off, and I'll be on right after James. We start at 11 a.m. tomorrow, Eastern Standard Time. Okay. We've obviously got the rates, decisions, and everything, the conference. And then Nick will actually come on at 1:30, okay, to kind of close out the show, him and Chris. So just so you guys know the logistics of tomorrow, the programming change, that's the way it'll be. But yeah, we'll see you at 11 a.m. starting with James. Take care. Trade safe. Talk to you tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.